The soft tissue of corporate America, or the soft tissue of Trump, is that he responds to the markets. The only time he has pulled back is not because of protests or the courts. The only time, or quote unquote, a co-equal branch of government, the only time he has pulled back is when interest rates spike or the S&P goes down. What is our best shot at the S&P going down? Simple. Go after the subscription services of the companies that represent 40% of the S&P. In today's office hours, we talk about Trump in Canada, resisting big tech as an investor, and the value of focus. Our first question comes from Diane Brooks1 on Instagram. They say, why do you think Trump is so focused on belittling Canada? The honest answer is, I don't know, because they're close or because it's like that movie on Wall Street where Charlie Sheen asked Michael Douglas, why did you have to break this company? And he goes, because it was breakable. So Canada is our largest trading partner. Mexico and Canada are actually tied. He's also sort of zeroed in, I think incorrectly, on the notion that past trade deals have disadvantaged the U.S. And Canada was central to his push to replace NAFTA with the USMCA. He tends to highlight bilateral trade imbalances and sector-by-sector outcomes. And he frequently points to specific industries, especially things like, he likes the kind of tangible stuff, dairy, autos, lumber, steel, and aluminum, where he says Canadian policies or experts hurt U.S. producers. And these industries are typically more important with kind of what he perceives as the real America and people he feels are advantageous to him politically and tend to side with him, whether it's farmers or the manufacturing states in the industrial Midwest. So also, I wonder if he just sees it as a real estate play, that, oh, it's our neighbor, let's buy their house. The problem is it's around all of this, it's just really fucking stupid. Let's look at oil. They transfer to us oil and energy and shale in its rawest form, and we add value to it, and we get a discount on it because of proximity, and we sell it at a much higher margin. They have manufacturing plants where they produce cars, parts go back and forth. They send in timber, they send in oil, manufactured products, which tend to have operating margins of 10 to 20 points and be produced by companies that trade at a PE of, say, 8 to 15. And then in exchange, we sell into them iPhones, chips, digital services, banking, things that have exceptionally high margins, sometimes 40 to 50 points of operating margins, and are housed within companies that trade at a PE of 20 to 50. So in sum, if there's been any asymmetry in trade, it's been towards us. And that is for every dollar of trade we do with Canada, we import in a dollar worth of goods from Canada, right? So dollar into Canada of our shit, our iPhones, our chips, they put in a dollar of cars, timber, oil into the American market. The dollar we sell into them is literally worth 3 to 10 times more to American shareholders or to the American company than the shareholder value they get from the dollar they sell into the U.S. If there's a trade imbalance or an asymmetry, it benefits us, full stop. But because it was such a mutually beneficial relationship, and because there's been a level of trust that's been built up there by virtue of the fact that Canadians went into World War II before we did. They followed us into Iraq. They followed us into Afghanistan. We have fought shoulder to shoulder. So Canada fucked up, it trusted us, and 75% of its exports come into the U.S. And I think that essentially Trump said, oh, we have leverage. Maybe they're our friends, but we have real power and I can bully them and push them around. And they kind of have to take whatever tariffs we send to them. And Prime Minister Carney has pushed back and said, look, this might be bad for us in the short term, but Canada's not going to be bullied. Anyways, his views on trade are just batshit crazy. I think he did get China right. He did highlight in his first administration that there was asymmetry with China, that they basically steal our IP, rip it off, and then sell us back the finished good for less, gutting our industry. I think there was real validity there. By the way, since COVID, Chinese exports are up 40%, but its imports are at 1%. In some, China's basically decided you can buy our shit, but we're not going to buy yours. And that means trade representatives all over the world need to unify to push back on China. But when the biggest consumer economy is sclerotic and declaring war on all these foreign nations, we can't pull together. And China's been effectively able to atomize us vis-a-vis Trump's stupid policies. According to Justin Trudeau, Trump's obsession may be due to Canada's significant supply of critical minerals. And then Paul Krugman's theory is that Trump hates Canada because it's a fundamentally decent place. It's an interesting theory. Trump, who nobody would describe as a decent person, dislikes and maybe even fears people who are, says Krugman. That's some armchair psychology there, but it makes no sense. They will be hurt very badly. We will be hurt badly. And it's essentially fraying the operating system and the world order. And what's fueled the middle class and unlocked unbelievable economic growth really since kind of the 90s and Clinton, it's been an embrace of global trade. And that is, it is hard on certain losers, certain industries that aren't competitive with global suppliers. But at the end of the day, if you can buy bananas for less money and then reinvest that additional consumer spending in other products that we're better at, what's happened over time is that we have traded or swapped out low-wage, non-competitive industries for higher wage, higher gross margin, higher shareholder value industries. So Dave Chappelle summarized it perfectly. We don't want to make Nikes, we want to wear them. The people assembling iPhones in China, I think it's 2,000 parts, make about $500 a month, $6,000 a year. The average wage of an Apple employee in Cupertino is figuring out retail strategy, distribution, marketing, supply chain, lobbying, regulations, communications, investor relations. They average about, I think, $220,000 a year. The notion somehow that manufacturing is going to come back, which I think was one of the primary objectives of these stupid trade wars, it's not happening. Also, folks, in terms of manufacturing, Americans have a fetish with it. And 80% of Americans think that we need more manufacturing in America, but get this, only 20% want to work in manufacturing. You can't bring your dog to the factory floor. These tariffs have not in any way inspired a renaissance in manufacturing. What they have done is hurt some of our tourism that employs 12 million people in the tourism sector. So in sum, if these tariffs and a war on Canada make no sense economically or morally, trust your instincts. Support for the show comes from Quince. Quince makes everyday wardrobe essentials that are built to last. You'll find organic cotton sweaters, polos for every occasion, light jackets to keep you warm during the changing seasons, and like everything from Quince, each piece is made with premium materials and ethical, trusted factories and priced far below what other luxury brands charge. Our own Claire Miller has a couple of Quince pieces. Tell us what you think, Claire.
Their tank tops are a staple in my closet, even in the winter. I love their sheets. I have a few sweaters from them. I haven't upgraded to the Mongolian cashmere yet, but I think I'll have to after all these ads. So that'll be my next purchase. But I love Quince, high quality, fair prices. Can't recommend them enough.
There you go. Refresh your wardrobe with Quince. Go to quince.com/Prof G for free shipping on your order and 365-day returns. Now available in Canada as well. That's QUINCE.com/Prof G to get free shipping and 365-day returns. Quince.com/Prof G. Question number 2 comes from MXML on Instagram. They say, how does your call to action to unsubscribe from big tech impact your investment plans? Yeah, this is a tough one. So I've already unsubscribed from Uber, Amazon Prime, and last night I spent about 2 hours trying to unsubscribe from Paramount Plus, and I still can't figure out. I got a smiley or a sad mountain saying I'd unsubscribe, but unsubscribe from Uber and Amazon Prime. The really shocking thing was when I unsubscribed or I canceled my Uber account, it gives you this graphic that says, this is how many times you've ordered from Uber Eats. I've ordered from Uber Eats, I think, 34 times. And then it said, this is how many rides you've taken. I think I've been a member of Uber for about 10 years. Let me say, I love Uber. I think it's amazing. I love the little graphic of how my Cadillac Escalade, oh, it's around the corner. I hope he parks in the right spot. Oh, he's going to be here in 2. I just absolutely love it. I think it's an amazing service. I haven't owned a car in 4 years. And it's something I've really enjoyed, not owning a car. All right. How many Uber rides have I taken in the last 10 years? 3,746. Okay. See above, love Uber. I take Uber Lux. I like to think I'm a big deal. I have some money and I always take Uber Lux. I did some analysis. That's approximately 370 rides a year if you divide it evenly across the 10 years. Most of my rides are to Midtown, to do a meeting, to the West Village to go drinking, or to an airport to go somewhere else. So my rides are expensive. The average Uber Lux ride when I joined in 2015 was $40 to $60. And this is the big tech playbook. They underprice, they consolidate the market with an incredible offering. And then once they've consolidated the market, they raise prices faster than inflation, which is what Uber has done. It has raised prices 7 to 10% a year, despite inflation going up about 3 to 3.5% a year. The result is in 2025, the average price of an Uber Lux ride for yours truly is somewhere between $80 and $120. So let's call it $100. So do the math. I have been spending, no joke, $35,000 a year on Uber. And before you say, yeah, privileged, yeah, guilty. And my point is that you don't realize how much money you're spending on these things because they raise their prices, you get used to them, and they make it frictionless such that it is so easy to spend money. Back to your question. I own stock in Apple and Amazon is my big tech stock pick of 2026. I have owned these stocks since 2009. So to sell them would incur an extraordinary capital gain. But at the same time, if I'm going to walk the walk, do I really want to finance these companies? Do I want to send a signal? So I am contemplating selling down or selling my positions in these companies. I have not done it yet because, and this is a good problem, these companies are up 10, 20x, meaning that basically the entire sale amount is going to be taxable. So I try to be very careful about having an emotional reaction. At the same time, I need to walk the walk. I'm going to unsubscribe or cancel something every day. I think it's amazing how many things you have that you didn't know you had. I have 3 different ChatGPT accounts. I'm not even talking about canceling all of them, but I had a family meeting. I love those. That's basically my boys rolling their eyes and me lecturing at them and saying, someday you'll respect me. And I said, we're going to cancel our streaming media. Told them about what I was doing. And they're like, yeah, we're not. And they're like, no, we're not canceling our streaming media. I'm like, okay, I'll let you keep one. And of course, the argument broke out from we have 6 streaming media platforms. We're going to 1. I'm not suggesting you give up everything, but if you're a subscriber to Anthropic or ChatGPT, pick one. Could you do without Amazon Prime for a month? Could you take more cabs, or could you eat local and not use Amazon Grocery? I mean, there's just a ton of different subscription services you could do away with. And on one, I think you're going to find you're going to save money. I think it hits these firms really hard. My next thing that'll be pretty easy is to unsubscribe from Apple TV. And by the way, these companies have increased their prices 20 to 40% just over the last 2 or 3 years. And the soft tissue of corporate America, or the soft tissue of Trump, is that he responds to the markets. The only time he has pulled back is not because of protests or the courts. The only time, or quote unquote, a co-equal branch of government, the only time he has pulled back is when interest rates spike or the S&P goes down. What is our best shot at the S&P going down? Simple. Go after the subscription services of the companies that represent 40% of the S&P. And that is, if you cancel ChatGPT at $20 a month, their pro offering, that's $240, right? Okay, it's not a lot of money, but say you decided not to buy groceries. Kroger's trades at 0.3 times revenues. OpenAI trades at 40 times revenues. What does that mean? That means that every dollar that goes to ChatGPT results in about $130 in market value. Put another way, you could buy $30,000 less groceries. The average home spends $6,000 on groceries, meaning 5 homes, American homes, could take all of their grocery spending down to zero and, I guess, plant gardens and figure out a way to survive. And it would have the same impact on the markets as one person canceling their ChatGPT subscription. So I'm suggesting we focus on pulling the string that might have a real impact on the markets, which is the only thing that Trump listens to. But back to your original question, I am going to do something involving my stocks and my capital to try and send a signal to these companies and these financial institutions that they need to speak up before it is too late. And if you're interested in joining us, please go to resistandunsubscribe.com. Again, that's resistandunsubscribe.com. We've tried to make it really easy with links for you to investigate which big tech subscriptions you can easily cancel without much impact on your day-to-day life. We'll be right back after a quick break.
Support for the show comes from Indeed. Right now, there's a talented person out there who could take your business to the next level, but you can't just wait around for them to fall into your lap. With Indeed Sponsored Jobs, you can connect with that person right away. Indeed Sponsored Jobs boosts your job post for quality candidates so you can reach the people that can help your business thrive. People are finding quality hires on Indeed right now. In fact, in the past minute, 27 hires were made on Indeed, according to Indeed data worldwide. Join the 3.3 million employers worldwide that use Indeed to connect with quality talent that fits their needs. Spend less time searching and more time actually interviewing candidates who check all your boxes. Less stress, less time, more results, now with Indeed Sponsored Jobs. And listeners of this show will get a $75 sponsored job credit to help get your job the premium status it deserves at Indeed.com/Prof G. Just go to Indeed.com/Prof G right now and support our show by saying you heard about Indeed on this podcast. Indeed.com/Prof G. Terms and conditions apply. Hiring, do it the right way with Indeed.
Support for Prof G comes from AMP. AMP is a sleek, minimalist home fitness device you actually want in your house. That means no cables, no clutter, no nonsense. You just walk up, turn one smart dial, and you're working out in under 15 seconds. And full disclosure, I love this piece of exercise equipment. This thing you just put on your iPhone, I put in my headphones, and it tells me exactly what to do, and it uses AI to figure out what I need to do more of, less of. It even knows when I need to stretch. I love this thing, and for those of you who listen, I very rarely give shout-outs like this. The biggest challenge in fitness is consistency, showing up and making it a part of your routine, and AMP removes that friction. Strength, mobility, yoga, it's all there. If you're trying to build a routine that sticks, AMP makes it easy to stay on track, especially if you've got a packed schedule. Check it out at joinamp.com. That's joinamp, joinamp.com. Welcome back. Question number 3.
Hi, Scott. My question is about the value of focusing on one project and how elastic one's focus should be. Due to my ambition and FOMO, I've spent most of my life managing or building multiple projects at the same time. A full-time career, a couple small businesses, investing, thought leadership, etc. I've had an epiphany that maybe my outcomes have been worse than if I had just focused on doing one of those things really well. I see you as someone who has many pots cooking at the same time, but it seems like they all use the same ingredients. For example, the content you create for Prof G Media becomes a book, newsletter, and a section course. What are your thoughts on focus, how liberal one's focus should be, and if finding synergies between projects is essential to making them all work? Or maybe you think people should just have one successful project before expanding into others.
Yeah, a secret weapon that most people don't take advantage of is focus. And that is, I'll give you an example. I hate side hustles. There was a trend around side hustles. All young people need a side hustle to make some extra money. If you're spending a lot of time on side hustles, it means you need to find a different main hustle. And I think your job in your 20s is not to find your passion, but to find something you're really good at and then double down on it and focus on it and try and become one of the top 10% in that profession with an objective of within 10 years being in the top 1%. I think it's okay to workshop stuff if you don't love your main gig. You got to make some money. You want to investigate some other things. You want to dip your toes in water. But as soon as you find something where you think, I could be in the top 10% in 3 years and the top 1% in 10 years, I think you go all in on it. Now, what I've done is I've basically gone all in on one function and leveraged a superpower. Now, what is that function? I've gone all in on storytelling, and that is I create a lot of content where I try and find data, couch it in an entertaining, humorous, provocative, irreverent way. That is what I do. That's my superpower. That's my focus. The majority of my day is around creating content that is entertaining and educational. Now, my superpower is finding really talented people that scale that focus. We have a graphics team. We have a video team. I was just talking to a woman who runs our company, Catherine Dillon, who I've been working with for 15 years, and she's saying we need more people on the video team. I'm like, go ahead and make another full-time hire. We have probably 25 full-time people and another half a dozen contractors working at Prof G to try and scale my focus. And each of them has their own focus. Catherine's a great manager. She's very good with people, but she also is very good on the creative side. Billy runs our video group. Drew is our tech guy. So what I would suggest is find someone close to you who understands business and say, this is all I'm doing. Should I pair a couple of these things? And pairing is really important. So for example, I don't go on boards for longer than 4 years. And I'm now much more disciplined around, okay, this sounds interesting, but what am I going to get from it? How is it going to advance? I try and set corporate objectives, financial objectives every year, objectives around my relationships, mostly around my boys. And then I run almost every decision or allocation of time. And I used to say yes to goddamn everything. You know, the sexiest word in the English language is no. So the problem most people have is not what they say yes to, but what they say no to. And what I would suggest is you just do an audit and have some friends help you and say, what am I really good at? What would pay the most dividends if it got into the top 10 or 1%? And then quite frankly, try to outsource or clear everything else off those decks. Now, if you haven't figured that out, dancing in different parties might make sense to see which one gets traction. But at some point, you should be totally focused on one thing. And then success is a series of small acts of discipline every day. If you're doing financial content on TikTok, You need to put out 1, 2, 3 pieces of content every day. It's like investing. Small acts of discipline every day, a few bucks every day, adds up to millions by the time you're my age. So what are we going to do? We're going to build a kitchen cabinet of people. You're going to describe very honestly and openly all the things you're doing, what's working, what isn't. Ask them where you should be focusing or if you should be focusing. And then you're going to be very disciplined about doubling down and putting all of your human capital into that one thing such that you can be in the top 10 or the top 1%, and then you're going to get really good at saying no, such that you free up more human capital to provide the artillery and the ammunition to be exceptionally focused. That's all for this episode. If you'd like to submit a question, please email a voice recording to officehours@profgmedia.com. Again, that's officehours@profgmedia.com. Or if you prefer to ask on Reddit, just post your question on the Scott Galloway subreddit, and we just might feature it in an upcoming episode.